All right, let's talk about a company that's been making some serious noise in the air cargo world, Afcom Holdings. They have been on an absolutely incredible run. But as you're about to see, their story is this really fascinating mix of explosive growth and some pretty big question marks. So let's get into it. Okay, let's just start with the number that's got everyone's head spinning, 43.5 times. That is the year-over-year growth in net profit that Afcom just reported. I mean, wow. That's a figure that makes any investor stop what they're doing and pay attention. But a number this huge, it practically begs for a closer look. And that really brings us to the main question we're tackling today. When you see growth that just goes vertical like that, you have to ask, right? Is this for real? Is it sustainable? Is the company's foundation actually solid? Or are there maybe some cracks hiding just out of sight? That's exactly what we're here to figure out. To really get the full picture, we've got to start with the good stuff. Let's build the bull case. We need to see exactly why there's so much excitement swirling around this company in the first place. So who are these guys? Afcom is a logistics company worth over 2,300 crores. What they do is operate cargo flights, mostly to Southeast Asia, and they also act as general sales agents for other airlines in Asia. Basically, they're the ones moving the goods for everybody, from huge e-commerce companies to car manufacturers. Now let's dig into the details of that growth story, because honestly, the numbers are pretty wild. I mean, just look at this. The growth here is just off the charts. For the June 2025 quarter, their sales tripled compared to last year. But check out the net profit. It absolutely exploded. It went from just zero point 0.6 crores to over 27 crores. That's that 43.5x jump we were talking about. That's the kind of performance that can define a breakout company. And here's the really crucial part. These numbers aren't just appearing out of thin air on some spreadsheet. No, this is the direct result of a company that's in total hyper-expansion mode, making huge real-world moves at a dizzying pace. And you can see this momentum in real time. Just look at what they pulled off in the summer of 2025 alone. In May, they get into the IATA clearinghouse, which helps them get paid faster. Then in July, boom, a new route to Vietnam. In August, they hit an all-time cargo record in the Maldives and open a brand new gateway in Bengaluru. This isn't just growth. This is relentless, aggressive expansion. Okay, so that's the bull case. It's powerful, it's exciting, pretty impressive, right? But, and you knew there was a but coming, now we have to flip the coin over. It's time to check for some warning lights that might be flashing in the cockpit. And this slide, right here, this is the whole puzzle in a nutshell. On one side, you've got that incredible soaring net profit. But on the other side, you have two things that are deeply worrying. 4 years in a row of negative operating cash flow and a really high number for working capital days, 248 in the last fiscal year. So what on earth does that actually mean? Let's break this down real quick. Operating cash flow, or OCF, is the actual cash a company brings in just from doing its day-to-day business. Think of it like the company's financial lifeblood. Profit on paper is one thing, but if you aren't actually bringing in more cash than you're spending to keep the lights on, you can get into serious trouble. Being in the red for 4 years straight, yeah, that's a huge flashing red flag. And if that wasn't enough to make you pause, there are a couple of other things to consider. A key executive, the company's secretary, resigned late last year. And just recently, in August 2025, one of the company's promoters sold off more than 3 crores worth of shares. Now, these things can happen for all sorts of reasons, but when you see them alongside the cash flow issues, they definitely add to the bear case. So you've got this wild tug of war, right? Insane growth on one side, some really serious financial risks on the other. So how is the stock market handling all this? Is it rewarding the growth or is it punishing the risk? Well, if you look at its valuation, Afcom's PE ratio, which is just a way of comparing its stock price to its profits, is sitting at 31.3. For this particular industry, the typical range is somewhere between 10 and 40. This means the market is pricing Afcom at the higher end of its peer group. It tells us that investors are laser-focused on that growth story, and they're willing to pay a premium for it, basically betting that the company will sort out all these underlying issues. This all brings us to what's next. Afcom's leadership knows they can't just stand still. They have to keep this momentum going. So, what's their game plan to fuel the next leg of this journey? It really boils down to 2 very simple things. To keep growing this fast in the logistics business, you need more capital to fund everything, and you need more assets, in their case, airplanes, to carry more stuff. Simple as that.
And their expansion plan is seriously ambitious. Look at this. Phase 1, they're planning to more than double their fleet by adding 3 more Boeing 737s. And that's supposed to happen really soon. For Phase 2, they're thinking even bigger, adding 2 massive, wide-body Boeing 777s so they can start flying between continents. The big goal here is to have a fleet of 7 aircraft in just a few years.
But of course, planes are not cheap. So how are they going to pay for all of this? Well, they've got a huge board meeting scheduled for September 2nd, and the whole point of it is to get approval to raise more money. They're looking at things like preferential placements or QIPs, which are just ways to sell new shares to big investors to get the cash they need for this expansion. And that leaves us with the final and most critical question. Afcom is clearly strapping on bigger jets and charting a course for the stratosphere. They're trying to raise the fuel they need for the journey. But can they fix those serious cash flow problems, those engine troubles, while they're already flying at such an incredible speed? Or is this a classic story of a company flying too high, too fast, and maybe a little too close to the sun? I guess only time will tell.